In this video, I'm going to walk through the steps of disposing of underapplied or overapplied overhead. Before I can walk through those steps, I'm first going to need to calculate the predetermined overhead rate. If you recall from a previous chapter, we do that by dividing our total estimated overhead at the beginning of the period, which here is going to be 900,000, divided by an estimated activity level that we feel like is driving the overhead. Here we're going to base our overhead on machine hours, so that total overhead of 900,000 will be divided by the 75,000 machine hours. Again, both estimates. Then we need to apply the overhead by taking whatever predetermined overhead rate we get from step 1 times the actual activity of machine hours after the fact, which here is going to be 60,000. And once we figured out that applied overhead from step 2, we'll compare that to the actual overhead, which here we're told is 850,000, to then get our under or over applied overhead. So again, let's finally work this out. Predetermined overhead rate, estimated overhead of 900,000 divided by 75,000 machine hours means we're going to apply overhead at $12 per machine hour. Now that we know it's $12 per machine hours, let's finally multiply that times the actual number of machine hours that we encounter for the period, which is 60,000, meaning we're going to apply $720,000 of overhead during that particular year. Finally, let's compare that to the actual overhead we incurred after the fact. Actual overhead was 850,000. Let's subtract out the overhead we applied of 720,000, meaning we underapplied $130,000 of overhead. So our actual costs, again, 850,000. We only applied 720,000, so we were 130,000 short. I will note, you may say, gosh, that's a big problem. Well, they note during the year, a large quantity of furniture in the market resulted in cutting back production. So we had a lot less activity than we anticipated, and that does note that here. So what are we going to do with that? If you recall, I had mentioned in a previous video that manufacturing overhead is a temporary account, meaning it accumulates balances throughout the period, but we've got to wipe that balance out before we produce our financial statements. As of right now, before we do a journal entry to deal with that over or underapplied overhead, recall our actual overhead cost of $850,000 would go on the debit side of manufacturing overhead, whereas our applied overhead of 720,000 that we calculated would go on the credit side. So actual is a debit, applied is going to be a credit, leaving our balance at 130,000 at this point. We need to zero that out. So if we think through, if we do the simplest method of removing this balance in manufacturing overhead, we would transfer it all to cost of goods sold. Again, right now it has 130,000 debit balance in manufacturing overhead. To zero it out, we need to credit manufacturing overhead by 130,000 to get that zeroed out to zero. Simplest method is transfer that into cost of goods sold, debiting cost of goods sold for 130,000. So you look at what you do with manufacturing overhead, and then cost of goods sold is the opposite direction. The other way to think through this is if we didn't apply, this is underapplied, if we didn't apply enough overhead to the cost of our product, we need to increase that. Cost of goods sold is an expense. Increasing it means we debit it. So again, we debit cost of goods sold by 130,000. Now, I will note this is the journal entry if we underapplied overhead. If we overapplied overhead, we'd switch this around. Debit manufacturing overhead because it would have had a credit balance, and then credit cost of goods sold because we would have put too much in and we need to subtract it. So just be prepared. This is the simplest way to deal with manufacturing overhead being over or under applied. Not the most accurate, but the simplest way. The more accurate method is to allocate, not just take it all to cost of goods sold, but allocate it amongst the 3 different accounts that manufacturing overhead still resides within. And that would be not only cost of goods sold, but also work in process. You still have some incomplete goods that have manufacturing overhead in them, and finished goods, some complete goods that still have manufacturing overhead within them. So our journal entry is going to have a lot of similarities. If we have underapplied overhead, we're still going to credit manufacturing overhead for $130,000. We're still going to debit cost of goods sold for something, but we're also going to debit work in process and finished goods. These are asset accounts, work in process and finished goods. We didn't initially put enough into them, so we're going to add more. The hard work is how much more are we going to put? What are we going to put in those, and how is this going to change our original debit to cost of goods sold of $130,000? Well, I just wanted to clear some room. We're going to allocate that $130,000 based upon the amount of overhead we put into those three different accounts: work in process, finished goods, and cost of goods sold. For example, I'm going to do cost of goods sold so we can do a comparison. There was $504,000 of overhead applied into cost of goods sold, $180,000 of overhead applied into finished goods, and $36,000 of overhead applied to work in process. If we add those three up, again, that's the applied overhead of $720,000. Take the $504,000 applied into cost of goods sold, divide it by the $720,000 applied altogether, and 70% of the overhead was applied to cost of goods sold. So take that 70%, multiply it times the $130,000 that is underapplied, and so 70% of that $130,000, or $91,000, instead of all $130,000, is going to get allocated to cost of goods sold. So instead of our journal entry including just one debit to cost of goods sold for $130,000, it's going to be a lesser amount of $91,000. I'll let you work through the remaining amount that's going to get allocated to finished goods and work in process in an effort to keep this video just as short as possible. Another problem I want to mention is if we do change the way that we're allocating the overhead, it definitely is going to affect our overall net operating income. If you want to work through this too, because we're impacting our expenses differently. For example, cost of goods sold before we dealt anything with underapplied overhead is $1.4 million. If we take all that underapplied overhead of $130,000 and add that, remember cost of goods sold is an expense, debiting in is going to expense it, it would boost up our cost of goods sold or expense to $1,530,000. If instead we allocated amongst the three different accounts, work in process, finished goods, and cost of goods sold, a lower amount, only $91,000, would get added to our $1.4 million, and it will only bring up our expense to $1,491,000. That's a different expense if you compare these numbers of $39,000. You can also look at it this way: $130,000 versus $91,000. So if we apply it only to cost of goods sold, all $130,000, our expenses are going to be greater, which means our net operating income would be less. Now, you don't want to choose the way you allocate it based upon making your net income higher or lower. That's not the game we're trying to play. I just want to show you it is going to have an effect. Obviously, the allocation method is more accurate, but it is going to take more time to work through it.